What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future. I'm also going to do a brief technical analysis of Tesla's share price as how it compares to a Wyckoff accumulation schematic, and how on earth this comparison can be made to kind of give us an idea of what Tesla may do for the future. Now, before I break any of this down and kind of go over the hypotheticals, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,500. And the best part is, out of those 10 free stocks, 5 are going to come from the wheel right here. This means that you could win 5 free Tesla shares, 5 free AMC shares, or a mix of all of them. It's a limited time offer. It ends today, so please check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla, there is something very interesting that I've mentioned about the way we've seen price action. And one of the things that I theorize is the fact that it is possible that we are tracking a Wyckoff accumulation schematic, and this would be the first schematic, right? From a Wyckoff perspective. Now, with that said, if you're not familiar with Wyckoff, it's essentially just a pattern that stocks have a tendency of following, and this pattern is derived based off how institutions kind of dictate the prices of these, and they basically trade in a way where stocks end up following this pattern, and they do this to profit off of it. And it's just their ways of making money. If it didn't work, we wouldn't see these connections. And I feel like it's been many months since I last actually talked about this. So what I want to do in this video is kind of break down the different phases. So we had a very, very strange early start into phase A. So I kind of drew this out previously. We had this preliminary support like already down here. We got to bounce off that from when we were dropping. We have right here the selling climax, or you could even argue that this was the selling climax already. And no, I think this would have to be it. You have the automatic reaction right here, followed by the first sell test in phase A. Then we get this big reaction. All right, institutions start pumping this thing up. This was as we approached the year, Tesla hitting the 1200 mark. And then I think that's when we almost reached, that's not the all-time high. The all-time high was a little earlier. So that's how we could kind of see this as an indication that we were starting off based off Wyckoff, because we were at our all-time high right here. And then what happens is we enter phase B a little bit later. So phase B comes here, we get this push up to the key resistance level, then we drop all the way down to the sell test in phase B. And you could argue it's like right here because we have this long wick. Then we get this other like peak right here, right? See how there are two peaks similar to this? And then what happens is this is where things become kind of tricky, because Wyckoff isn't perfect. I'm not using it to kind of predict or guarantee any predictions in a sense. But what I'm doing is I want to show you what could end up happening if we were to track this even more. Because what's tricky is we don't know where the spring is. See the spring phase? When we enter the spring in phase C, this would be near our bottom, the bottom for Tesla. We don't know where it is yet. And there's a possibility that it could be right here, but I find that a little bit unlikely considering the different factors affecting the markets. Or it could be maybe near the end of July, depending on earnings, depending on many different factors. No, Tesla has been respecting an upward trend here, as you probably have noticed. It's really hard to tell exactly where we are. I mean, you could argue that even an upward trend could still be a part of the last ending of phase B, kind of like right here. So it's very, very hard to tell exactly where we are, which is why no one, no matter how good they are at technical analysis, could truly know the exact bottom. All right. That's the crazy thing about the markets. We don't always know. So one strategy that's been working is just dollar cost averaging down. We don't know if this was the bottom. If it was, then that would be great. But it could be a little lower, and that's kind of like the risk. But then what you're noticing is, I think during Tesla's earnings, they might just make some very good announcements that could really be very bullish news for the future. They may even announce the date of the stock split. the exact specific date confirmed. And if that's the case, if it is like somehow going to be announced around August, the exact date that's confirmed, that is going to be a very bullish catalyst. Not because it improves the fundamentals. I know these splits don't improve fundamentals. They open more doors. They open more doors for options. They open more doors for retail investors. It's going to be pretty big. And the question is, after the stock split, are we going to drop to an even lower number relative to where we were right here? That's something I don't truly know just yet because it's dependent on so many factors. It's dependent on inflation. It's dependent on other factors like this. Now, seeing the Fed right now, it appears that the market still has it a little bit more probable that we see a 75 basis point hike, but it's actually pretty close. Could be a 100 basis point hike. With that said, we're also dependent on how hawkish the Fed is. Now, let's just say hypothetically the Fed raises the federal funds rate by 100 basis points. If that's the case, right, if that ends up happening, what could happen to Tesla is this thing could drop a little lower and we could actually be in the spring phase. And if there is some other thing that comes out, like the market announces a recession, I mean, there's no telling what could happen. Maybe we drop a little more. But once we're near this like bottom, this could be the final bottom. I'm not saying it's going to be perfectly here. It could be lower. And it's possible that if the Fed is raising the rate in such a hawkish manner that quick, what could happen is the economy demand could slow down even faster, causing supply to keep up, causing inflation to essentially drop at a faster rate. This would mean that the markets would start to recover even sooner than many people would imagine. And we could already enter the last point of support relatively quick near the end of the year. That's a possibility. We trade like this, and then we slowly start to see a recovery if the Fed starts to kind of announce that they are no longer tightening, but they're going to announce quantitative easing. And if that's the case, if they announce it near the end of the year, hypothetically, the market's going to rally. Tesla's going to start pushing up really fast. All right. So it's very dependent on policy and other factors like that. But I just want to kind of paint this in a way as one of the hypotheticals. Now, another situation would be, what if the recovery phase of the market's a little bit slow? And what if we already saw the bottom? What if the spring was like right here? What would this mean for the markets? Could it be that we're already starting to recover? It could be that that's a possibility. Could have a little more downside due to the FOMC meeting, but we would kind of trade a little sideways for a longer period of time, like this, and then slowly start pushing up to that last point of support. And I would anticipate the recovery to be a little bit slower if that were to be the case, right? Just like this, because the Fed wouldn't be as hawkish. The Fed would raise the federal funds rate by 75 basis points, causing a move kind of like this, just a slow recovery. Still not too bad. Similar. I'm sure you guys understood the point. Now, what would happen if there's a lot more blood to come? What if the market is going to take an even bigger hit? Well, that would basically make it seem like this next move we're going to make may be the bottom. So I don't know if the bottom was this right here when Tesla dropped to 626, or if we're about to make a new bottom like down here. But it's a little hard for me to say it's going to happen around like August, considering we have the stock split. I mean, that's going to be bullish news, right? Because it opens more doors for investors, and stocks tend to historically perform better. So it's a little bit hard to kind of tell what this thing is exactly going to do. Maybe we get some red with the FOMC meeting, and then maybe the stock split pushes us up, and that could be the catalyst that really triggers FOMO and a bit of a recovery for Tesla stock. So could there be more downside maybe around September or October? If that's the case, we could have a spring like down here, one last dip like this before this thing starts to rocket, before the Fed announces quantitative easing and Tesla and the market kind of like recover going into 2023 or even earlier. So I'm kind of seeing this as being one of the most likely possibilities. Maybe it's going to be spread out a bit more. I know all of these are kind of all over the place. I apologize for that, but I'm sure you're getting the point here, though, because it's dependent on Fed policies. This one right here is if the Fed raises the federal funds rate by 100 basis points, the market would probably see the recovery sooner. We get like 75 right now, and the Fed is not as aggressive. It could be a little bit slower. And if we're bound to see a new bottom, the spring could be like down here, way down here, right? That could be it as well. So I personally don't know exactly how it's going to play out. And in fact, nobody does. But all of these are the possibilities in Wyckoff. From what I'm seeing, it's looking like either 626 was the bottom, or this thing is bound to drop a little bit more and then find the bottom within just a couple of months before inflation starts to start like dropping, and then the market should start recovering. I would estimate around like as we start Q4, I think the market should actually turn a lot less choppy and it should start to see some more bullish price action. And we should start the recovery phase either in Q4 if the Fed does switch their policies, or around Q1 of 2023. That would be my estimate. So, not financial advice. I'm not promising any of these possibilities, but I just want to go over these as just to show you what Wyckoff could be suggesting and why on earth we don't truly know what the true downside or bottom could be. Wyckoff could actually suggest all of these, but the more likely one, I mean, it really depends on if we already saw the bottom or not. So my main goal right now is to kind of tell you guys that you should be prepared for anything. These could be spaced out a little bit more, but overall, I think we're most likely going to follow something similar to one of these. All right. And with that said, as a person buying the dip, you can't time the bottom perfectly. So you have to learn to strategize based off that. With that said and done, thank you for listening. I hope I brought some value into your guys' weekends, and I will most definitely see you guys in the next one. Tesla to the moon, and peace out.